Welcome to Griffonomics.
Glad to be here for this one.
So imagine you're trying to stream a high-definition video, right? But your Wi-Fi router is like 250,000 miles away.
Yeah, that's rough.
And on top of that, you are forced to share that single connection with a dozen different government space agencies.
It's a massive bottleneck.
Right. That severe data bottleneck is the actual reality of the modern space race. And today, we're setting out to analyze a company that is trying to completely monopolize the solution to that bottleneck.
We're looking at intuitive machines.
Ticker symbol LUNR. Now, if you have been tracking the aerospace sector, you probably know them as that scrappy outfit that managed to land a commercial spacecraft on the moon.
Which is a massive feat on its own, honestly.
Right. Oh, absolutely.
Right.
But the source material we're diving into for today's deep dive reveals a company that is aggressively mutating. Like they are shifting from being this episodic niche lunar lander provider into a fully vertically integrated multi-domain space prime contractor.
And, you know, that label, Space Prime, it carries massive weight in this industry.
It's not a term you just throw around.
Exactly. Because a true Space Prime, they aren't just a delivery service taking payloads from point A to point B. They are the foundational infrastructure layer.
Like the bedrock of the entire orbital economy.
Right. We are talking about a structural pivot toward actually owning the hardware, the software, and the communication networks, and doing this across low Earth orbit, geostationary orbit, and cislunar space.
Okay, let's unpack this. Because the sheer scale of the financial transformation we are looking at in these documents is frankly staggering.
The numbers are wild.
They really are.
Yeah.
Here's the single most shocking detail from the financial projections we found in the sources. So Intuitive Machines generated $210.1 million in revenue in 2025.
Okay.
But for 2026, they are projecting revenue between $900 million and $1 billion.
Yeah.
I mean, that is essentially a 5x revenue scale up in a single 12-month window.
It is an incredibly aggressive target, and honestly, it requires a suspension of disbelief if you only look at their historical operation.
Right, because you don't just 5x your business by doing the exact same thing a little bit faster.
No, not at all. Hitting that $1 billion mark isn't a matter of, selling a few more disposable rockets or securing one extra lunar mission.
A leap from 200 million to $1 billion requires a totally different machine.
Exactly. An entirely new operational paradigm. And to understand how they plan to physically execute that, we have to look at their transition to what the sources call the build, connect, operate model.
Build, connect, operate. So if I am reading the mechanics of this right, they're actively moving away from the Uber ride model of space delivery.
Yeah, that's a good way to put it.
Because historically, space missions were highly episodic. You win a government contract, you build a lander, you launch it, it touches down and sends back some telemetry.
And then the mission ends.
Right. And you only get paid when you complete the delivery. But this new model, it sounds like they're pivoting from being a company that builds custom RVs for a single road trip to a company that builds the toll roads, the gas stations, and the GPS system for everyone else.
That is a very solid way to visualize it, though with a massive caveat regarding the friction of the environment.
What do you mean?
Well, you are building a toll road in a vacuum where, a micrometeorite can obliterate your infrastructure at 17,000 miles per hour.
Oh, right. A slight environmental hazard.
Just a bit. And you cannot simply dispatch a maintenance crew in a pickup truck to fix it. But financially, your analogy is spot on.
Okay, break down the phases for me.
So under the build phase, they are manufacturing the spacecraft. Then comes connect, where they take those deployed assets and link them into a persistent communications and data relay network.
And the final piece?
Operate. That's where they generate high-margin, recurring revenue by providing infrastructure as a service to other operators who need to use that network.
Which fundamentally alters their revenue concentration. Because looking at their past ledger, they had a really heavy reliance on NASA.
A very heavy reliance.
Up to the tune of 78% of their revenue was tied to just one government agency. That is a massive single customer bottleneck.
Yeah, that's the kind of concentration that keeps CFOs awake at night.
I bet. But these sources show they are targeting a radically different mix moving forward. They want 40% commercial, 40% civil space, and 20% national security.
And that diversification, that is the hallmark of a true space prime. But you have to ask the mechanical question here.
Right. How do you suddenly start servicing commercial telecom companies and the Department of Defense when your entire historical heritage is just building small lunar landers?
Exactly. You can't just write, "We are now a multi-domain infrastructure provider" on a corporate whiteboard and instantly manifest the factory floor space.
Or the engineers. Or the flight heritage to build advanced defense satellites.
You really can't. Which brings us to the operational catalyst driving this 5x revenue jump.
The big M&A move.
Yes. Their $800 million acquisition of Lanteris Space Systems.
Formerly known as Maxar Space Systems, right?
That's the one. This acquisition is the physical engine behind those 2026 projections. They didn't build the capacity from scratch, they bought it.
They bought their way to the front of the line.
Pretty much. Lanteris brings mature, flight-proven manufacturing at scale. Specifically, they focus on their 500 class and their highly lucrative 1300 class satellite platforms.
I have to challenge the reality of this, though. I mean, M&A is notoriously difficult under the best of circumstances.
Absolutely. It's fraught with risk.
But in aerospace, you are talking about merging a scrappy, agile startup that moves fast and takes massive risks to get to the moon.
With a legacy hardware manufacturer.
Right. A manufacturer accustomed to waterfall engineering and decade-long timelines. That sounds like an operational and cultural nightmare. Why are these specific Lanteris satellite platforms so critical that they were willing to drop $800 million just to acquire them?
What's fascinating here is the absolute dominance and the architectural specificities of the 1300 series platform.
Okay, tell me about the 1300 series.
Well, this isn't experimental, bleeding-edge tech that might fail in orbit. The 1300 series is arguably the industry's most proven geostationary platform.
And by platform, you mean like the satellite bus?
Yeah, a satellite bus is essentially the chassis of the spacecraft. It provides the power, the propulsion, the thermal control, and there are over 95 of these 1300 class platforms operating in space right now.
Wow, 95 currently active.
Yes, we are talking about over 3,000 aggregate years on orbit with 99.99% availability.
That's insane reliability.
It is the underlying workhorse for commercial giants like SiriusXM and EchoStar. So by buying Lanteris, Intuitive Machines completely bypassed a decade of costly R&D.
They bought immediate, unassailable credibility.
And a warm production line. They didn't just buy the blueprints, they bought the active factory.
But the hardware isn't everything, right? Because the sources point out they also acquired a company called KinetX.
Ah, yes. KinetX is the secret sauce here.
From what I gather, Lanteris gives them the physical hardware, but KinetX brings like 30 years of deep space navigation software.
Precisely, because you can't just park a satellite in deep space and expect it to stay there.
Right, gravity is always pulling at it.
Exactly. You need orbital mechanics software to prevent it from drifting. Hardware without the proprietary software to manage it in the extreme complexities of deep space is essentially useless.
So KinetX gives them the brains to run the Lanteris brawn.
KinetX gives them the ground system experts and the flight dynamics algorithms to actually command these multi-orbit constellations.
Okay, so now that we understand the physical capacity and the software backbone they've acquired, we need to look at what they're actually building with these platforms to hit $1 billion.
The fun stuff.
Yeah. The sources point to two primary vectors of innovation: the solar system internet and orbital defense. Let's dig into this internet concept first.
It's a massive project.
Intuitive Machines secured the sole award for the data relay portion of NASA's Near Space Network Services contract, or NSNS. And the ceiling on this contract is an astonishing $4.82 billion.
And that valuation really reflects the severity of the problem it solves.
The bottleneck we talked about earlier.
Right. Right now, to communicate with anything in deep space, whether it's a lunar rover, the Artemis missions, or the Voyager probes, NASA relies on the Deep Space Network.
But that network is fundamentally oversubscribed, isn't it?
Grossly oversubscribed.
Yeah.
If you are operating a rover, you literally have to schedule your bandwidth months in advance.
That is wild. It's like an entire city trying to share a single dial-up modem.
Exactly. So Intuitive Machines is tasked with building an independent relay constellation around the moon. If you want to operate on the lunar surface, especially the far side, you will have to bounce your telemetry off an Intuitive Machines satellite to get it back to Earth.
Here's where it gets really interesting, because they aren't just functioning as a dumb data pipe.
No, they are getting into data processing.
The sources highlight a recent $175 million strategic equity investment, specifically geared toward building space-based data centers.
It's a huge pivot.
Are they trying to be the AWS of space? Like bringing edge computing directly into orbit?
The AWS analogy works conceptually, but let's break down the mechanics of edge computing in space. Because on Earth, edge computing means processing data near the user to save bandwidth.
Right.
In space, it is an absolute game changer.
Because of the latency. Right now, if a satellite takes a massive infrared image, it has to beam gigabytes of raw data all the way down to a ground station on Earth.
Which takes forever, relatively speaking.
And then the ground station processes the image to figure out what it's looking at, and then beams instructions back up. That round trip is incredibly slow.
It is.
But if you have the compute power on the satellite itself, it's like having a smart security camera. Instead of streaming 24/7 high-definition video to your phone just to show you an empty porch, the camera has a local chip.
It does the thinking locally.
Right. It processes the video internally and only sends you a tiny 5-kilobyte text alert when it actually spots a person.
That is the exact mechanism, and it bridges perfectly into their national security pivot.
The defense contracts.
Yes, because in defense, milliseconds are the difference between a successful interception and a complete catastrophe.
Which brings us to the SDA contract.
Right. This is why Lanteris was selected for the Space Development Agency, or SDA, Tranche 3 Tracking Layer contract.
That's a mouthful.
It is, but the scope is huge. They are building 18 advanced spacecraft for this program, and these satellites are designed to detect and track highly maneuverable hypersonic and ballistic missiles.
And edge computing is the key there.
Exactly. If you utilize those high-powered Lanteris platforms for on-orbit edge computing, the satellite processes the infrared sensor data locally. It identifies the hypersonic threat in real time.
Oh, wow. So it doesn't wait for Earth to tell it what it's seeing.
No waiting. It immediately alerts a ground-based interceptor, bypassing the massive latency of raw data transmission.
So they're essentially putting server racks in orbit to track missiles.
That's one way to look at it.
That clearly explains the 20% national security revenue target. But let's ground this conversation a bit.
Okay, let's look at the numbers.
We have discussed the brilliant tech, the smart cameras in space, the solar system internet. But as an investor or an analyst, you have to look at the hard ledger.
Always.
And looking at 2025, they did not look like a billion-dollar company. They reported $210.1 million in total revenue.
And if you just glance at the top-line summary, you would actually see a slight contraction.
Wait, really?
Yeah, they pulled in $228 million in 2024. So surface level, they shrank.
Which is a glaring red flag for a company promising a 5x growth curve for the very next year. Why did top-line revenue drop right before this supposed mega expansion?
You have to isolate a very specific headwind in their 2025 financials. It's the OM's third contract.
Only Sir 3.
Yes. NASA had a project called OSAM, which stands for On-Orbit Servicing, Assembly, and Manufacturing.
Okay, what was that supposed to do?
Essentially, it was a program designed to create robotic gas stations and repair bays for older, dying satellites. Intuitive Machines was contracted for task orders on this project.
That sounds like great recurring revenue.
It was supposed to be. But government priorities shifted, NASA abruptly scrapped the entire OSAM initiative, and a $71.9 million hole opened up on Intuitive Machines' balance sheet.
Wow. A prime example of the danger of government reliance. A pen stroke in Washington wipes out $72 million of recognized revenue.
Exactly. But, the metric management is heavily emphasizing right now. If you extract that specific OMIS third cancellation from the ledger, their underlying base revenue.
Like the core business.
Right. The core business actually grew by roughly 65% year over year.
Okay, 65% base growth rate is healthy, absolutely. But jumping from an adjusted base to nearly $1 billion requires contractual proof.
You want to see the receipts?
I want to see the receipts. Where is the actual signed proof that this money is locked in for 2026?
It sits entirely in the backlog.
Let's hear the backlog numbers.
So at the end of 2025, their standalone backlog was a modest $213.1 million. But if you look at the estimates from late February 2026, which fully integrates the Lanteris acquisition and officially books the SDA Tranche 3 defense contract.
The 18 satellites.
Right. That combined company backlog violently scales up to an estimated $943 million.
Nearly $1 billion sitting in the queue.
Exactly. Management has explicitly stated that roughly 2/3 of their expected 2026 revenue is already supported by that contracted backlog.
And that's what gives them the confidence for 2026.
That contracted visibility is what is driving their projection of positive adjusted EBITDA for the year.
Okay, I hear the backlog numbers. But if they are sitting on nearly $1 billion in contracted work, and they have this unassailable 1300 series manufacturing line, why is the broader market acting so skittish?
Because the market sees the operational risks.
Right, because the stock chart included in these sources tells a story of extreme caution. Let's play devil's advocate here. Let's look at the actual friction and the execution risks threatening this entire operation.
And we should, because the operational hurdles to actually recognizing that backlog are immense. This is far from a frictionless transition.
Let's start with the dilution engine, because the math here is perplexing to me.
The recent equity raise.
Yeah. The sources detail a recent $175 million strategic equity raise, but they priced it at $15.12 a share, which was a harsh 20% discount to the market price.
Which naturally caused the stock to immediately plunge.
Of course it did. Now, earlier in the year, in August, they raised $345 million in convertible notes. They ended 2025 sitting on over $582 million in cash and equivalents.
A very healthy cash pile.
So why would a company with over $500 million in cash willingly dilute their shareholders at a massive discount?
If we connect this to the bigger picture, it reveals the brutal reality of capital expenditures, or CapEx, in the infrastructure business.
Meaning it's just incredibly expensive to build this stuff.
Yes, they had $582 million in cash at year-end, but deploying a lunar data relay constellation before your competitors do requires a massive, immediate upfront sprint.
The NSNS network isn't going to build itself.
Exactly. In 2025, their free cash flow was negative $56 million. They had to significantly ramp up CapEx to start physically building that network.
So they needed unencumbered cash immediately.
Right. By raising equity, even at a discount, they secure that cash without over-leveraging their balance sheet with more debt, which is what convertible notes eventually become if they aren't converted. They're willingly burning cash to win the infrastructure race.
But a mountain of cash doesn't solve physical operational friction. You mentioned earlier that Lanteris brings 1,170 employees.
It's a massive headcount integration.
Integrating a legacy workforce of that size into a nimble startup is a recipe for internal paralysis. And on top of that, they still have massive exposure to the whims of the federal government.
We saw that with the OMS III cancellation, but it also manifests in simple administrative delays.
Like budget shutdowns.
Precisely. In the fourth quarter of 2025, they missed their revenue estimates. They brought in $44.8 million against expectations of $59 million.
And the reason was?
The primary culprit was government budget shutdown delays and appropriation holdups in Congress. If the government stalls its budget, Intuitive Machines cannot recognize the revenue for the work they are doing.
That is so frustrating for a company trying to scale. Let's also talk about the fixed price trap, which is a classic, brutal aerospace pitfall.
Oh, it certainly is.
The documents explicitly state that their upcoming IM-3 and IM-4 lunar missions have officially degraded into loss contracts.
This happens constantly in this sector. A few years ago, Intuitive Machines signed fixed-price contracts with NASA.
Just to get their foot in the door, I assume?
It's the standard foot-in-the-door strategy. You agree to a strict price to prove your capabilities and win the bid. But we have been in a highly inflationary environment since then.
Supply chain costs skyrocketed.
Exactly. And complex engineering always uncovers unforeseen cost overruns. The fixed price they agreed to is now significantly lower than the actual cost to build and fly those missions.
So they just have to eat the loss?
They are legally bound to execute IM-3 and IM-4 at a loss just to maintain their relationship with NASA and clear the deck.
They have to absorb the blow to keep the client. But there is one final glaring operational risk that overshadows all of this. It's a massive single-point failure.
The launch provider?
Yes. They're building this brilliant solar system internet. They're manufacturing the hardware, but they are entirely reliant on a single launch service provider to get their lunar landers off the Earth.
SpaceX.
Exactly. They're building the orbital highway, but they do not own the dump trucks taking the concrete to the construction site.
That's a great way to frame it.
If SpaceX suffers an anomaly and the FAA grounds the Falcon 9 fleet, or if launch capacity simply gets bottlenecked by other priorities, Intuitive Machines is paralyzed.
It is the most profound vulnerability in their entire ecosystem. If you cannot secure a ride to orbit, you cannot deploy the NSNS relay network.
And if the network isn't there, no recurring revenue.
Exactly. If the network isn't physically there, you cannot start charging NASA for data services. The entire Build, Connect, Operate flywheel violently grinds to a halt based entirely on the operational cadence of a completely separate company.
So what does this all mean? We have mapped out the staggering 5x revenue projections, the strategic brilliance of the Lanteris acquisition, the mechanics of space-based edge computing, and the very real existential threats of cash burn, fixed price losses, and launch bottlenecks.
A lot to weigh.
It is. Synthesize this for us. What is the ultimate verdict on this transformation?
The verdict is that Intuitive Machines is a textbook, high-alpha, highly speculative play. They have positioned themselves perfectly at the intersection of commercial space expansion and orbital national security.
The potential is massive.
It is. If management can successfully execute the Lanteris integration without stalling production, if they can deploy the Lunar relay network without catastrophic launch delays, and if they can stem the bleeding from those legacy fixed-price contracts to hit that $1 billion target.
A lot of ifs.
A ton of ifs, but if they do it, the market will forcefully re-rate this stock. They will have successfully proven that the vertically integrated space prime model works. But, the margin for error is razor thin. Any technical failure in orbit or prolonged government funding delay could severely fracture those projections.
And that is exactly why this deep dive matters to you. Whether you are rigorously evaluating the aerospace sector for your portfolio, or you are simply fascinated by how the architecture of the off-world economy is being built, Intuitive Machines is the ultimate litmus test.
They really are.
They are writing the operational playbook in real time on how a private entity attempts to seize control of the cosmos's foundational infrastructure.
This raises an important question, though, something for you to consider as you watch this sector evolve.
What's that?
Well, we have spent this time focused on the financial and technical mechanics of building the solar system internet. But let's look at the physical reality of space. There are only a limited number of prime orbital slots and specific frequencies available for data relays around the moon. It's limited real estate.
Exactly. If Intuitive Machines gets there first, deploys this massive Lanteris-built constellation, and locks in the primary bandwidth, they aren't just an infrastructure provider, they effectively establish a monopoly on lunar orbital real estate.
Wow.
As international rivals and competing space agencies push for dominance at the lunar South Pole, what happens when they realize a single private commercial company already owns all the prime parking spots and the only viable spectrum for communication? Could the next major geopolitical standoff be fought not over lunar borders, but over bandwidth monopolies?
Risk defined, portfolio protected.